If you are trading synthetic indices, this video is for you. I want to show you how to follow trend and how to trade using trend continuation. Because you see, the way synthetic indices operates, they are basically simple asset to trade, but then you need to know how to follow it. Because small movement can cause you so much loss, and then small movement can also give you big money. All right. So let's do trend continuation strategy in this video, just showing you how to follow trend to avoid getting into trouble. Now, for those of you who don't know how to use ICT concepts such as the institutional reference points, you will need to learn the 7 institutional reference points because they are very important. But you can strictly learn things like order block, all right? Order block is important, a fair value gap, a mitigation block, let's call it a mitigation block, and then a breaker block. All right, these few institutional reference points are very important. And then another thing is about market structure. Without understanding market structure, you will not be able to trade using trend continuation. So the next thing is also about your time frame. Now, time frame is not so much of a trouble for you trading with the synthetic indices, but then you need to trade knowing what is the overall direction of the market. But I will not be going into that in this video because I assume you know how to find your direction. All right, direction is one of the easiest things to find. For example, this is VIX 75, and then you see the way these assets work, it's pretty much easy. You will see them giving you the direction, whether an uptrend or a downtrend. Then you can follow that trend as price move in that direction. Now, what the higher time frame gives you is that because we have price something like this, all right, let's assume this is the range that the daily time frame is printing, and then in the daily time frame you see price do something like this, trying to just move up, you know, printing something like this as price keeps giving you opportunity. Now on the higher time frame, it takes longer time for this to deliver. So what you should do on the higher time frame is to basically know where the draw on liquidity is. The draw on liquidity basically talks about where the highs are, where the buy stops are, and the sell stops are. Because if you're following the trend around that area, you should be careful because price may have difficulty or it may shift structure in that exact point. So if I am following this trend here, I am doing trend continuation. I'm basically taking the buy. Is it okay for me to take buy here? No, because I have actually reached a certain level of liquidity. So this is the only reason why you need the higher time frame to know where the draw on liquidity is. So if you're trading it, make sure you pay attention to the higher time frame, especially the areas that have draw on liquidity. So let's get into our trend continuation. It is simple and straightforward, like the way you can see it here. Now bringing in market structure. Let's start from, okay, let's say we are starting our trade from here. We can see price has moved up to this area. We don't know what this area is, but if we should mark this area, you're going to see that we have actually touched something like a liquidity area. All right. If we are to look at this area, let me go to the higher time frame so you can see what I'm saying. Okay. You now see what I'm telling you. Price have actually reached a liquidity point, and that was the reason why you saw price turning direction. So on the higher time frame, it is possible that you would find distance. That is why if you go to the lower time frame doing trend continuation, you must be able to pay attention to those details. All right. So let's start from there. Market structure comes in. The moment you are done with your liquidity sweep, now begins the trend. Something like this, you may not be able to take trade with it because this was a fast movement. But these ones, you will see a lot of entry coming in your way. Okay, now market structure shift comes in from here. How did we know that trend has ended? We can only identify the beginning of a trend when we have a shift in market structure. Let me show you, for example, something like this. You see, this is an uptrend, right? You see price moving, break of structure. Every time price breaks structure to the upside, it gives you an indication that the trend wants to continue. So the buy is here. buy is here every time you have a break of structure. So at any point, price moved up, creating this higher low, pushed up, and then price breaking below the higher low. That is a market structure shift, because the structure here was an uptrend structural formation, but now we are violating that uptrend structural formation, and that comes in with a downtrend. So this is the same thing happening on this synthetic. Price was moving up, creating higher low, failure swing, crashing. Did you now see how important it is? So this becomes a market structure shift. I don't have a delineation there, but then you can give it a name. Let's say text market structure shift, MSS. That is a market structure shift. I want to put it at the middle, and then this in the center alignment. Let me put this, okay, the smallest. I hope you are understanding what I'm showing you right here. Our middle point. All right, so that is a market structure shift as you are seeing it. So I hope this is okay. If you can save it, or you can simply say apply default. So once you marked it, you can, I think there is a way to save it. Let's go. I'm not sure this one has it, but that is a market structure shift. Now comes in your trend continuation trading strategy. As price was coming, you may not have an entry here. All right, you may not probably have an entry in that point, but then if you have an entry, it's fine. If you don't have an entry, it's also fine, because this is a mitigation block. That is why I told you the institutional reference points are important. Mitigation block and entry there for the short. If you're going short, this is an entry, your stop loss is here, and then you will target the next point. All right, as price push downward, if you miss this one, in case, because it's possible to miss a lot of entries while waiting for it. Another one, every time price breaks structure, it will now sweep external range liquidity, break off structure, and now push up, creating something like a mitigation block also. But then it also has a fair value gap. Let me see if I can get this correctly. Fib channel. Let me see, equidistance tool. All right, let me see if I can have that in parallel channel. Okay, this one. It helps me to get the fair value gap very correctly. So this one, a fair value gap will be marked here to here. Now, this is important because you need these institutional reference points for you to be able to take the trade correctly, so that you will know what direction you should be going as price is printing. All right, so you have this, price had this break of structure to the downside. Remember, we said it, this was a break of structure to the downside as price was going lower. All right, so price coming up right there becomes an entry. Trend continuation, we want to continue with the trend. So what next is the point of entry? As price was coming down, you look for an entry again. Do we have a break of structure here? No break of structure. So it's possible to even have a missed entry, or maybe you may not be able to take trades seeing that. So we keep following trend right here. A break of structure to the downside. You will always see this as far as price is not done with the liquidity on the higher time frame. So price having this break of structure to the downside, now retracement into what? A fair value gap, a confluence of a fair value gap and a mitigation block. Is that not an entry? It's an entry. Except if you are not patient. If you're patient with synthetics and you follow trend, you will always see an opportunity to trade. All right, so you keep following break of structure, you see opportunity to enter trade. Okay, break of structure, opportunity to take the trade as price keeps going. So every point you see the shifting market structure, it means the trend has ended. So now look at this, price was coming down, all this area, you see. Now the shifting structure came in handy right here. This is the shifting structure. Remember the diagram I was showing you. At every point we have that price. Okay, this is a shifting structure. Let me delineate it correctly. Market structure shift. So price ended the movement and now an uptrend started, just like you can see here. You see price ended. Probably we are done with the liquidity on higher time frame and we want to go back up into an uptrend. All right, so it comes in again. shifting structure. If you're doubting this one, you can be patient and wait for another one. Break of structure. Where is price coming to? A fair value gap for an entry. Boom. You see? And I've noticed one thing with synthetics. It uses this fair value gap so much. It uses fair value gap so much. As price was going up, every time you see a shifting structure, avoid it. All right? Break of structure to the upside. You see, fair value gap here. Even though this fair value gap is still on premium, and that is why you need the knowledge of premium and discount. You can find all this on my YouTube channel. All you need to do is to just search for the video. So if you see a fair value gap that has been mitigated, price hardly comes back to it. But I don't know why price did not come to this particular fair value gap. It used the one on the premium side or at that premium area. So price had this pushed up, use this. Now another break of structure right here. I just want to do it quickly. Break of structure and price coming back right to a fair value gap touching this other block. Boom. Notice what price did again. I told you if you see a shift in structure, be careful because it may end that trend movement. Another shift in structure coming in here. Boom. A shift in market structure. Is that not market structure shift? The same thing I was showing you. After the last higher low has been cleared or has been violated, it means trend has ended. The last higher low is here and it has been violated. Price coming back to where? Premium area, entry. Is that not an entry? It's an entry. Downward movement. You see, price keeps on going up. If you see price coming, as far as you don't have a shifting structure, it means there is trend continuation. Here, shifting structure. It means this trend has ended. Now we will look for an uptrend again. You see, this is the only thing you need to stay profitable in this market. You see, all these entries, opportunity. I don't want to go into explaining these things over and over and over again because I know some of you are already doing well in the market. You just need some of this confirmation. Okay. Okay. An entry in that area. You see another entry here. Break of structure, fair value gap, order block entry, break of structure. You see, every time price refuses to come back to a fair value gap, it means there is no fair value gap that is unmitigated in that area. So break of structure, fair value gap here, price touching it and then it moved up. Break of structure, fair value gap, touching it and then it moved up. As price keeps going up, notice what price is doing. Immediately after it swept the liquidity above, that is on the higher time frame, it shifted structure downward, shifting structure to the upside. Now we are now on an uptrend, so you look for opportunity to keep going up, up, up. Price break structure comes down to a point of entry and then you continue with the trend. The same thing happening time and again and again and again. Now notice what price did here. You need to pay attention to the little details. You see, this is a mitigation block. Price came back to the mitigation block. Boom, pushing up to that area. You see, these are the things you should pay attention to. Trend continuation with an understanding of where liquidity is resting. It's powerful when you're trading synthetic indices, guys. I hope this video helps somebody. I just tried to, as much as possible, show you how you can go ahead to trade another nice entry. See, break of structure, fair value gap was targeted by this, and boom, price came back to the downside. All right, I hope this video helps, guys. Thank you for watching. If you have any question, I'll be glad to answer. You can watch some of these videos. All the things are connected. There is nothing that is single-handedly taken in this. You need to connect the institutional reference points, the fair value gaps, all the blocks, all those stuff, market structure, to be able to come up with something good in this. And all of these things, you can find them on my channel. Thank you, guys. See you in another video.